So thanks, FintechTO, for having me here tonight. It's been a long night. You've listened to a lot of talks. I think I'm the last one, and I'm going to take a slightly different approach to this talk than others have before me. And it was just about 3 years ago that our co-founder and CEO, Kirk Simpson, was standing on this stage talking about how we were an accidental fintech company. And what I'd like to do is I'd like to use tonight's conversation to tell you a bit about the metamorphosis that we've gone through from being that accounting company that many of you may know from 2010 to being a full-fledged financial service company today, all through payments innovation. And that metamorphosis actually happened across 4 phases. And those 4 phases we're going to cover with a key learning from each. So I'm going to dive right in and begin with what we're all about. So at Wave, we believe that our mission is to be the single business system that entrepreneurs can't live without. And between 2010 and 2013, we built accounting and invoicing software and then gave it away for free, because we fundamentally believe that no small business owner should ever go under simply because they don't understand their finances. And I'm willing to bet that a decent group from this audience, if you've ever run your own company, you've probably come across our software and used it. And the brand affinity that garnered us began to bring us thousands of North American signups every single month. And we looked at that early competitive moat, and we asked ourselves, what monetization strategy could possibly align with our ethos as a company and help us earn revenue? And the answer at the time seemed really clear to our Chief Financial Service Officer, Les Whiting, who believed that if we could help small business owners smooth out their cash flow by collecting payments faster, that they'd be willing to pay a small fee and earn us revenue. So we get to phase 1, hypothesis testing. Never bet the farm unless you've done the legwork to maximize your odds of success. So rather than go all in, what we decided to do was to partner with Stripe and plug in their technology into our invoicing software. Now, the user had to have 2 accounts, and the experience was a little bit disjointed, but we saved all the technical work behind the scenes that we would have had to do if we were going to build this from the ground up. And in about a year's time, we were able to gather enough data to be able to see all the cohorts and the funnels performing to see if we could validate with user behavior whether our hypothesis was true. So what did we learn? We learned that the adoption and retention numbers were really quite promising. But at the same time, we were able to validate that our business model, if based on a revenue share basis, where Stripe would take the vast majority of the revenue from the processing fees and we'd only get a small fraction of it, wasn't going to be sustainable. So you could say that we had an economic incentive to cut out the middleman. Which brought us to phase 2. How to become a payment facilitator. Now, if you're not willing to stand on the shoulder of giants, you better be willing to become a giant yourself. Now, we had the evidence, but the question was, how are we going to do it? How are we going to become a payments company? We fundamentally believed that the user's experience was going to be paramount. We knew that from that very first payment collection through to onboarding, going through our KYC AML, topics you've been hearing about already tonight, through to refunding, or maybe having that first difficult chargeback. All of that had to be seamless, and it had to be embedded in our software. So we searched around looking for a processor and gateway with whom we could partner, and the right one for us was WorldPay, named Vantiv at the time. And we struck a partnership with them, a vendor partnership that would have us be what's called a payment facilitator. What that means is that we would be the merchant of record for all the transactions that we're processing through our system, and our users would be sub-merchants of ours that we'd be acquiring, and then we would be liable for all of the fraud and transaction losses that would be going through the system that we'd be processing. What this allowed us to do was to price our offering at 2.9% plus 30 cents, a very simple all-card, same price model that also allowed us to book the full revenue. So that was all ours, minus whatever fees we had to pay to our partners. And what we were also able to do was to get the offering on WorldPay's technology out in just around 8 months for the US market, a few more months for the Canadian market. But the real shocker is that it took us almost 2 additional years before we felt comfortable operating this at scale. So the learning is that it's really hard to build a payments business, and that the hardest part of transforming any company is learning new core competencies. So we went from being a software company to now being a financial service one, and we incorrectly embedded all sorts of behaviors into the wrong places. For example, we took fraud and risk mitigation, we took operations, we took compliance and put it into roles like product management and customer support. And we had to learn how to unwind that and instead begin to have dedicated tools that we built for operating the business, having dedicated teams for compliance, dedicated teams for fraud and risk mitigation, and beginning to operate like a full financial service company, no different than the way Stripe, Square, or PayPal were doing. And so after those 2 years and the stabilization, we reached phase 3. We were comfortable in our own skin, but we wanted to go beyond credit cards. And really, what we feel is that the enemy of progress is the adequacy of legacy. So we saw an opportunity in late 2016 to take a cut out of the largest remaining payment method that was relevant to small businesses, and in fact took the bigger transactions with it, which was checks. Stats at the time showed that in the US, 45% of all business transactions were still dependent on this method. And we asked ourselves, could we innovate here? And others had built technology around this space, ACH processing, Stripe was one of them, but we felt that the key to having a successful cut against checks was that the online payment using your bank had to be as simple and straightforward as making a credit card payment. You know, if you try to use your check, you're gonna have to find it, find the routing number, find the account number, and that's really clunky to type in. So if we could mimic logging into your online banking and scheduling a bill payment, maybe that could be the winner. And we took a really big risk with this. We rolled the dice and we launched what we called the bank payments offering at a 1% fee adjacent to our credit card processing. And we built it on top of WorldPay's e-check platform so that our processing technology could all be streamlined a single provider. And instead what we did was we poured our energy into a new vendor relationship, another company you've seen on this stage before, with Plaid. And using Plaid's technology, we created an experience where a payer of a Wave invoice could search for the bank, type in their credentials, see all of their accounts and the balances, and then pick one to pay with. And what we would do behind the scenes is get their routing number, get their account number, validate their balances, and also validate their ownership. And all of this together felt a lot more intuitive for the user base. But what did we learn? So it turns out that users don't really care to know how the banking system works. And that's pretty tricky when it comes to ACH, because ACH, the ACH network, has a no news is good news policy. You're actually never quite certain whether a transaction succeeded, and you're only ever knowing if it failed. And even then, it could be up to 180 days before you find that out. And this can be really tough when you're trying to settle funds quickly. So you try to settle funds quickly, you get a response a day or two later, 3 days later, saying, oh, return code non-sufficient funds. That's not a problem you have on the card networks. So users were getting confused about how to expect the system to work, how long before they get paid, and all that together was causing us angst. And in reality, they were getting paid between 1 and 7 business days. And this required ingenuity for us to overcome, which brings us to the final phase, faster payments, or faster settlements, sorry. And the fact is that fast is no longer fast enough. The future is instant. And thanks to Interac in Canada, as well as Zelle, Venmo that we heard about earlier, and Square Cash in the US, consumer expectation is moving more and more towards payments being real time. So we thought to ourselves, what could we do about this? And of course, it began with having to think through not having to manually touch transactions. We ended up having to build a pretty sophisticated evaluation engine for all the payouts flowing through our system, and then being able to mark them as either safe or needing manual review. And through that, trying to cut the settlement time in half for as many transactions as possible, otherwise we weren't going to be competitive. But even that wasn't enough. But over the past few years, Visa and MasterCard, the card networks, have been working on technology to allow for an instant deposit into a bank account that has a debit card attached to it that's powered by them. Visa calls this Visa Direct. And we ended up partnering with them at the end of last year to bring to life a new offering that we call instant payouts. And we give it away for a 1% fee and are able to deposit money into the bank account of the user in under 10 seconds, which is truly magical when you experience it. But yet again, this required us to reinvent parts of our system. Our settlement engine now had to account for some transactions going through ACH while others went over these rails. Our risk and fraud processes had to account for the fact that not all transactions should be eligible, because now we could instantly lose money with no ability to reverse it. Constant innovation. And so the lesson learned is that machine learning is a core competency that you have to have in your company if you're going to be trying to do instant settlement. And this world has a shifting landscape that's constantly trying to find new ways for credit risk and fraud to be assessed. And there's enormous amounts of data to sift through. So it's a perfect place for machine learning to pair with traditional heuristics as well as decision trees to help you through the process. So through these phases of payment innovation, we feel that our metamorphosis is complete. We still are building and giving away our software for free while processing billions in credit card payments and bank payments, hundreds of millions in payroll, and millions more in invoice advances to help small business owners smooth their cash flow. And with our recent acquisition of a really exciting fintech startup named Every, who was on this stage just a few months ago, you'll see us continue to bring payments innovation to the market for years to come. And of course, if this kind of innovation interests you, happy to speak with you. Find me after the talk, and thank you very much for listening.
Hey Monty, so now that we're giving a shout out to people who want to get involved and could potentially see themselves with Wave, what characteristics do you think are most essential to surviving such a metamorphosis? Like, which characteristics of the team do you think held, the vision together and ultimately let you deliver through all of this change?
So I think there are three things I'll point to. One of them I think Kirk mentioned in the talk, highly recommend it, go check it out, which is you just need to figure out how to survive. I think anyone who's ever been through a startup that's done several years, there will be incredibly tough moments and moments where your ability to drive towards your vision is going to get incredibly tested. The second thing is you need the expertise, and you need to build either in-house domain expertise or have incredibly smart people who pick the stuff up quickly. So hire the right people and definitely have your right culture. And then I would say the third one is you need a little bit of luck. There are plenty of companies who've come around and timing was just wrong. So don't think that everything's in your control. But also great companies create their own luck. You got to find, no pun intended, the wave to ride. And I think we've done that successfully as a company who transitioned and metamorphosized into financial services.
Given that you are the main merchant and you have sub-merchants within your profile there, how do you go about adjudicating who the merchants are? Because I'm sure you have various different business profiles, nature of businesses, businesses that are riskier than the others. How do you go about adjudicating that and assessing before paying them their payments there? And the other question is your adjudication and credit team, is it in-house or is it is the final say done by Vantiv and WorldPay?
Okay, complex question. So I'll answer the second question first. Pretty much everything we do is in-house. We find, as I alluded to, that that's necessary for that user experience to be holistically captured and delivered with the Wave values. And then the first question is, well, it's complicated. The answer is that it's complicated. So the adjudication requires us to look at literally dozens, if not hundreds of factors. There are some of the basic ones that you see pretty much anyone in payments uses. You've got your MCC codes, you've got the conduct of the business, the history of the business, you've got the kinds of volumes they're doing, the kind of contracts they're creating. You're not assessing necessarily just one, saying, oh, this business can come on our platform and do whatever they like. You're continuously taking a look at their patterns of how they're processing payments before paying that out. And then the other elements is using a lot of third-party tools where this is less about adjudication, more about like credit risk and fraud risk, where you're trying to assess using network effects whether this is an entity that has previously had issues somewhere in someone else's network. And that helps us ensure that we are operating with very low transaction losses. Otherwise, we wouldn't be a very good business.
Hi. How would you look at banks that are entering into the space of handling business payments? Because they would have a bigger backing and the traditional models that apply to them, and also the availability of funds. So how do you see differentiating with the traditional banks getting into your space?
I really like that question. Thank you. So there's two ways to answer that. The first is that the banks have been in the payments business forever. So pretty much anyone who gets into the payment space should, to some degree, just expect that you're going to be competing against the banks. So now it's about a point of differentiation. And our entire vision for the kind of company we are is that small business owners don't want to think about banking. Small business owners don't want to think about payments. Small business owners want to think about running their business. And running their business has the aspirational side of why they do it, but then it's also got the operational side. And your operations, you don't want to be focused at what you need to do with the bank. So it comes down to, I'm making a sale, I'm servicing a sale, I'm invoicing so I can get paid. And if those things are deeply embedded at that point of operation, we win. And banks have no chance of doing that right. And we're the evidence. There's plenty of other companies out there, like Square is a great example, who's the evidence. That banks don't stand a chance over time because that's not where the small business owner wants to put their attention. And we have a great investor and a great partner of ours, RBC. You'll see that, for example, in the UK, NatWest and RBS bought a company called Free Agent. You'll see this model proliferate. 5 years from now, you will not see the payments landscape be the same as it was 5 years ago in a major way in how it's aligned with operating software. Many, many examples of that we could give.
Awesome. Thank you. That was great.
Thank you.